we've showcased what's been happening with flows and some of the ETFs in the United States that are tracking the Saudi index. And our clients can easily pull this up at GTV Go. $231 million that have been pouring into U.S.-listed ETF this year. You look at Invesco, they're going to be listing the region's first exchange-traded fund tracking the country's shares, giving a chance to European investors. How do you position around this decision, Bassel?
Well, we're positioned quite constructively around this decision because we think that the decision is going to be a positive one. We do feel that Saudi's done enough to warrant an upgrade. Over the last couple of years, it's done the necessary changes for the market infrastructure, including delivery versus payment, T+2 settlement, as well as independent custody models. So our positioning is long Saudi, and we feel that this comes at a time where not just you have a liquidity story, but it coincides with a wider economic reform story and a social reform story that could be very powerful.
I find it interesting that you mentioned that. The folks at Arqam Capital, they put out a research note, and they make an argument that there's a 60% probability, arguably low, if you compare it to some of the other estimates, in terms of a chance that we get a favorable decision from the MSCI. But the concerns that they have is the length of the QFI process, and they also point to MSCI investors not having had enough time to test the new market operating model. Agree or disagree on this one?
So, just in terms of clarification, the Arqam note says there's a 60% chance that it happens in June, with a 30% chance that it happens in November. So what we're talking about here is a question of when, not if Saudi is included. Our view is that it happens sooner rather than later. We believe that Saudi has done enough and that investors have had sufficient time to test out the new mechanism. Just recently, Franklin Templeton has obtained its QFI license for a number of funds, and we found that process to be very smooth.
What about sectors? Are there any particular industries that are going to really outclass others after this MSCI decision?
So the obvious place to be right now is in large liquid names that are the strongest beneficiaries of those inflows. In essence, that relates to probably the banking sector, where we're starting to see lending growth. We are seeing that they are very strong beneficiaries of a rising interest rate environment because of the high degree of non-interest-bearing deposits that they have on their balance sheet. So banks are the obvious place to be, both from a liquidity perspective, but also from a fundamental perspective, where they have a nice tailwind from rising rates. And I think, across the sector, in comparison to other emerging markets, the banking sector stacks up quite attractively in terms of valuations.
Bassel, I want to get your insights on what's going on with OPEC, non-OPEC. The Russians now coming out and saying that they're looking to roll back some of the production cuts back to levels that we saw in 2016. We put up a chart to show what's been happening with OPEC output levels. Our clients can pull this up. GTV Go, the key function, as always, ready then to pump more to bring oil back into this market. Does that change your view on where oil prices go?
No, we remain fairly constructive on oil, and we're not overly concerned by an increase in production at this next OPEC meeting. We think that the market underappreciates just how undersupplied the oil market is currently. And there's a number of factors here at play. The first, of course, is the fact that in spite of the 1.8 million cuts that they did in November 16, markets like Saudi Arabia have cut deeper than the production cuts. Secondly, I think we've seen surprising figures on the demand side to the upside on oil demand, and that's likely to increase going into the sort of seasonal driving period in the States. And I think finally, the biggest challenge to the supply of oil right now has been the geopolitical risks, where you've seen the fact that Venezuelan production is down by 1 million barrels a day on the inability to produce more, and there's now an impending risk that some of the Iranian capacity that's $2.7 million barrels per day comes out of the market on the back of President Trump's decision to pull out of that agreement.
The reform process moving from strength to strength, arguably in Egypt, but there is the concern that if you move too fast, you might see the kind of backlash that we saw over the last couple of weeks in Jordan.
We don't think that's likely at the moment. These electricity hikes have been widely positioned in the past. We expect fuel hikes to come as well. Egypt has done a great job of being able to bring down its inflation to its lowest level of about 11.6%, which has enabled the central bank to cut rates. So these have been highlighted in the past. We think that Egypt is on a growing trajectory. We expect GDP growth to grow at 5.5%, which is substantially higher than Jordanian economic growth, and the benefits of that to be widely felt throughout the economy. So we don't see the two as being very closely correlated.
But we have seen a bit of a sell-off in Egyptian stocks across the board. This is not focused on a particular sector. What's happening here? Is this just the reality of profit-taking after what has been a very stellar rally? Or is it perhaps a change of interest ahead of the MSCI decision? A lot of the money that was in Egypt is getting reallocated to a market like Saudi Arabia.
No, I think this was in line with the broader EM sell-off, where countries that have a higher degree of dependence on external borrowing did sell off, and we saw currency weakness in places like Argentina and Turkey. And to some degree, Egypt was put into the same category, although we feel that the risks are substantially lower in Egypt. In terms of reallocation for the Saudi trade, well, there are much larger EM constituents such as China and Taiwan and South Korea that would probably be the first place for reallocating towards Saudi rather than Egypt, which actually just commands a very small part of the MSCI EM percentage.
So we talked a little bit about Saudi, we talked a little bit about Egypt. There is the other view in Qatar. And we had some interesting calls when it came to opportunistic buying on attractive valuations, but you're not subscribing to that. You remain underweight on Qatar, isn't that right? Yeah,
we think that the valuations have derated. Recently, actually, there was a slight rebound in the Qatari market based on FOL increases and liquidity repositioning. But more broadly, I think the issue with Qatar is that this isolationism that they have has really compromised the growth outlook. Valuations look okay, but we don't think it's conducive enough for an equity story. More interestingly, I think, is the fact that their market is very underrepresented in terms of the areas of the economy that are actually growing towards the FIFA 22 infrastructure spending and increases in gas production. So you don't get access to that in the Qatari market. What you get access to is primarily banks, and we feel that there's still significant margin pressure, and the weak macro backdrop is likely to subdue lending growth in those.
We've got the Fed making a big decision, likely to hike rates. That's the consensus trade. The implications for this part of the world, arguably, most expect central banks in this part of the world to follow the decision. But perhaps, again, I want to really leverage, because you've been traveling a lot, you've been all around the world. Just put it in context for us. I mean, what is the key risk with rising rates in the Middle East specifically?
Well, much less so than anywhere else in the world, because, quite frankly, the bulk of the Middle East's currencies are pegged to the US dollar. So, in fact, a strengthening of the US dollar creates sort of relative appeal of Middle Eastern equities vis-a-vis some of the emerging markets that have much more external vulnerabilities. In reality, the Middle East, relies on US dollar funding for a very small part of its funding profile, and that's very different to some of the emerging markets that have experienced a lot of currency volatility.
Right, so the argument is that there is more resilience with the Middle East than North Africa than there is, or is the case with what we saw in Brazil and Indonesia, and the list goes on, and why the risk of contagion. But if that's the case, are you seeing reallocation of capital into this part of the world? Are people making that trade?
The challenge with reallocating this part of the world is that it has been in the peripheries of EM investors' minds. It's not been part of the benchmark. And this is why this MSCI thing is so transformative, because effectively it brings the largest part of the region, which is Saudi Arabia, from the peripheries right into the mainstream of EM investment. And that's, I think, the reallocation that will happen. And I think that, coupled with this economic reform, social reform, makes it one of the biggest sort of transformations we've seen since China. And that will create the investor interest that we've been looking for in the region.